Good afternoon, everyone. A warm welcome to all of you at today's webinar on regulatory compliances under NFRA for Chartered Accountants. Myself, Prachinegi from CA Sansaar. For today's session, we have with us our guest speaker, CA Ganesh Balakrishnan ji. Ganesh ji is a partner in the audit and assurance practice with 3 decades of experience and is the office managing partner of Deloitte Haskins and Sales LLP for Hyderabad office. Ganesh ji heads the learning and development for the South Asia cluster for Deloitte audit function. Ganesh ji is a part of the IFRS faculty with the Institute of Chartered Accountant of India for all their in-house and open house programs and serves as a faculty of Doon and Bradstreet for their programs on IFRS and US GAAP. He is the co-opted member of the research committee of the Institute of Chartered Accountant of India for the year 2015 to 16. He is on the regular faculty of the Board of Studies for ICAI in imparting web-based lectures for students. He is presently associated with Dr. B. Ambedkar College and Bhavan's Vivekananda College for review of syllabus in accounts and commerce. He has presented papers in various forums in India and internationally at universities and other professional bodies on IGAP, US GAAP, and IFRS. He graduated from Osmania University and is a fellow member of the Institute of Chartered Accountant of India and a cost accountant. He is also a certified public accountant from the American Institute of CPAs. Now I request CA Ganesh ji to start his deliberation. Over to you, sir.
Thank you very much, Prachi. And you're able to see my presentation?
Yes, sir.
All right. Thank you very much. A very good afternoon to all the colleagues of the CA from the CA fraternity. A very warm welcome. I know we are in the midst of a topic which has actually created a lot of, I would say, discomfort with many of our professionals. But also it's very important for all of us to understand what the regulator is talking about and thinking about. They did do what is called as an analysis based upon the reports that are made available, including some of the monthly information bulletin, which is released by the MCA on the corporates. You know, NEFRA has actually been the other side of the regulator, basically what was thought to be a part of for the listed companies. Now has actually issued a consultative paper sometime in the month of September, on the last week of September, talking about certain consultation relating to the need to have statutory audit for micro, small, and medium enterprises. Just for an understanding of all the to all the professionals, the definition of micro, small, medium enterprises did undergo change effective 1st of July 2020, where the micro moved the investment to about 1 crore to a small moving to about 10 crores and the medium investments moving to about 50 crores. If you look at the turnover, it was 5 crores, 10 crores, and 250 crores. So we are talking about, I mean, the MSME, the consultative paper actually arose from there, and that's where it is. To the data that is available with the MCA or the bulletin that was used probably may not capture all the information because there are a lot of information which is still not available. But having said this, what is important for all of us is to understand now this is a regulator which is asking for information. NEFRA also released a document which says that more than 1,100 companies did not file the necessary forms 1 and 2. So now this is where our deliberations would be there today. We will be touching upon what is required from an auditor or a chartered accountant firm which does audit. I'll touch upon what are the responsibilities of NEFRA, what are the responsibilities of the corporate, what are the responsibility of the CA firm. I'll take you through. Then in my second leg of presentation, I will also talk to you about the consultation paper, which actually brought in a lot of heartburns in many of our CA professionals. As many of you know, are aware of this history of NEFRA, actually came through this, in the history came from NACAS, which was the National Advisory Committee on Accounting Standards. But once that was basically was working in alignment with the Companies Act 1956, the moment 2013 came, the model moved to what is called as a self-regulatory organizations that was introduced in the Companies Act 2013, and that's where the the formation of NEFRA really came in. The effective date was shifted later point in time, but under Section 132, it did include this model, and a new regulatory model, new regulatory authority was named called the National Financial Reporting Authority. And I think that is where everything started. Now, if you were to look at it, this effective date came up 1st of March 2018, the establishment of NEFRA as an independent regulator for the auditing profession. But if you were to look at it, what was the purpose of this? I mean, the whole objective of bringing in this establishment was to improve the transparency and reliability of financial statements, predominantly for listed companies and large unlisted companies in India. Actually, this is where a lot of public interest entities were involved, a lot of the public monies were involved. There were, because of larger scams that happened during the period, that's where this NEFRA really came into action in the year 2018. I will just run through some of these because just only from an understanding, and then pause where we need to really deliberate more and understand more. If you look at the constitution of NEFRA, whilst the earlier chairman just got retired, Mr. Sridharan got retired on 30th of September. In an interim, they appointed a 3 months Mr. Ashok Kumar Gupta as the present chairman. So this is basically the background about what they are. But if you were to look at the size of NEFRA and the people supporting, definitely they are in shortage of staff. And I think this is something which, because it is evolving and the number of companies that they need to do a review is also more. And this is an area where we can pick up, and the institute can talk about the amount of investment that the CA Institute has done versus what right now the regulators have got at this point in time. Now, this is an ever going question about the quality of audit. Now, if you were to look at it, it is not in India, not in present, across globe. The issue always comes up, is the quality of audit, has it been raised? But how do you determine the quality of audits? I think while you may have audit maturity models, predominantly, the ICI introduced the audit maturity model, basically to say, in terms of what is the size of the firm, how many people are involved in engagement, what is your expertise, do you have a process of quality controls, do you have an EQCR, all of these. These was used, was it on a timely basis, was it archived, where do you keep your documentation? These were basically the scores, and how is the quality of the financial statement on which an audit report is issued. Basically, the AQM, which is the audit quality maturity model, basically brought in this concept. But the fundamental question always remains, how do you determine the quality of an audit? Now, some may argue that auditors are basically watchdogs. Some may come back and say they are not watchdogs, they should be bloodhounds. And some regulators came back in the talking terms and said, no watchdogs, no bloodhounds, but they should be barking dogs. Unfortunately, we are professionals. We are not dogs to bark. We are not bloodhound. We are not. Basically, what happens really is we have a role that has been given to us. What is the role? The role for all of us is to issue an audit opinion on the true and fairness of a financial statement. That includes balance sheet, profit and loss account, cash flow statements, and notes to accounts. And if it's in Ind AS, you may have the statement of changes in equity. When you have all of these, the businesses have undergone change. Our whole role and responsibility only got involved in the auditing standards, in the accounting standards. What is your tool for an auditor? What is a tool for an auditor? The auditor's tool is just the auditing standards or the accounting standards. But today, the expectation of the users of financial statement, the expectation of the regulators are saying, hey, listen, we are not concerned with your auditing standards. We are not bothered about your accounting standards. We want you to be the soundboard where you should say, hey, listen, this is a red flag, there is a fraud. Now, the shift is from a transaction which gives true and fair, now a transaction is, the opinion is moving to true and correct. And this is the fundamental change which is actually coming. Now, there is this huge gap between the users of the financial statements and the auditors. Because today auditors only look at the auditing standards. Where do you say whether you need to issue a certificate? Go to the auditing standards. If you have to see if there are any UDN numbers, go to the literature which is given. If you have to give any guidance note on some, you have to give an opinion on something, go to the guidance note. Everywhere we are supported by the guidances, by the standards across. Now, where does, even though the institute has come through with the forensic standards reporting, but that's not the duty of an auditor to go through and do that is for responsibility of a forensic auditor to comply to the forensic audit standards. Now, when that real shift has moved, is the audit today a true and fair, or is the audit today true and correct? Now, how do you verify it? How do you verify the propriety of the transactions? And that is where the whole issue of quality of audits comes to it. The second aspect of it, businesses have undergone change. Businesses are no longer the same. But if you look at auditing standards, you look at accounting standards, have fundamentally remained the same. Today you talk about blockchain technology. Today you talk about artificial intelligence. Today you talk about something else. But what is fundamentally not changed is your auditing standards. It talks about sampling. It talks about materiality. It talks about relying the work on the other expert. But where does it say, hey, listen, you've got this tool, artificial intelligence, or you've got data analytics, use this 100% on the population. Don't rely on any of the sampling or materiality. And therefore, you get the population of audit interest and issue a report. What is your report on? Is a report on the true and fairness of the financial statement? Or is a report on whether there is a fraud that has happened? I think this is the dilemma which every auditor, every audit firm has to face, not now, not in the past, but on an ongoing basis. You will have regulators who will come back and say, hey, listen, you have left the, in the white elephants in the room. But absolutely, if you look at the financial statements, today, take a simple example. When you look at the NPAs in India, we talk about approximately 8,34,000 crores, which is approximately 25% of the overall budget of Indian budget, which is approximately 34 lakh crores. So 8.34 lakh crores and 34 lakh crores, of which banks which suffer because of a fraud is approximately 1,75,000 crores or 1,72,000 crores. We are talking 25% of NPAs are fraud. Now tell me, if we are auditing this and giving a true and fair view, should you now go back and say this 1,72,000 crores, which is suffered by the bank, and therefore all this are borrowed by the companies, and therefore you should have actually identified. This fundamental shift is actually come through, and we need to really look at it. I'm saying, every change in regulations is important, but we need to look at the merits of the changes in the regulations and look at it. Predominantly, this is in implementation notification that came through. I would just skip through this for the convenience of understanding. This is again the implementation. This is only for informations. Now let's look at the composition of NFRA. Now, if you look at NFRA composition itself, right, they are appointed by the central government. Have a chairperson, 15 members, member from accounting, auditing profession, and enforcement, a representative from the Ministry of Corporate Affairs, representative from RBI, the representative from SEBI, a retired chief judge, and the president of ICI. Now, this is the composition. And if you look at the composition itself, now, if you look at the pay, in fact, one of the issues that in the past chairperson of NFRA said, we don't pay well, so we don't get quality. The amount which they pay is about 2 lakhs per month for a chairperson and a 40,000 for somebody who is working with NFRA. In today's world, if you are a chartered accountant, a first-time chartered accountant, just go and apply a job. In the analysis that you get through in the ICI portal, you will find an average chartered accountant, newly qualified chartered accountant, makes approximately about 8 lakhs. Look at the amount he's making. Now, if you look at that aspect of it, and if you say these are the people who are joining at 40,000, just look at, what are we looking at? We have a professional body comprising of seniors, people who have been in the system versus right now in the nascent stage of the composition of NFRA. And I think this is something which we clearly understand about it. And if you look at, there are many reports that have been issued in the past, and recently 2 more reports have been issued, and in addition to that, there is a report which is issued on corporate, which I'll touch upon as we go along. The structure talks about accounting standards committee, auditing standards committee, and the enforcement committee. And the chairpersons and other members who are full-time employment cannot be associated with any audit firm, including consultancy, during their employment and 2 years after the expiry of such. Just imagine if you need somebody who's powerful, who is got literate, who would be there in this committee? Retired people who have been there in the system, or the young people who want to be associated, and therefore they say, 2 lakh buses up, theek hai humko, we are fine with it, we'll be there a part of the committee. I think this is something which you need to start looking at it in terms of how much such people. That means if any review keeps coming, I'm not talking about saying that the quality could be compromised there. They may still use some tools, but I'm only trying to look at it from a perspective. If you're paying peanuts to the people to come and join, what sort of people we can be looking at it? Just think through that. Now, if you look at NFRA, right? If you really look at NFRA is applicable. And this is a very important aspect of it. Everyone should know under the clause 1, A, B, C, D, E, they have listed various things. Companies whose securities are listed on a stock exchange in India or outside India. Unlisted public companies having paid up capital of 500, not less than 500 crores. Annual turnover of not less than 1,000 crores. In aggregate, outstanding loans or debentures not less than 500 crores. So we talked about companies listed and those companies which are large. Also talk about companies, it includes insurance companies, banking companies, companies engaged in generation of power, of generation or supply of electricity, all of these. Now just look at all of these. That means every audit firm which is included, if you're a part of the C&AG audit, you will be covered. If you're a part of the bank audit, you will be covered. So every company would be covered under this, especially the category of C. If you're doing listed company, automatically. If you're not doing listed company, those thresholds of turnover, paid up capital, as well as the outstanding loans. In addition to this, they said any body corporate or company or person or any class of body corporate on which a reference has been made to the authority by the central government in public interest. Basically nothing but those companies which have been involved in any fraud, those companies which have been involved in any of the dubious transactions, they can refer to it. Or let's say if there is anything inquiry by the enforcement directorate, you can look at it. A body incorporated or registered outside of India. It's not only in India, but outside of India. What is the criteria? The criteria, it could be a subsidiary, it could be associate of that company. If the income or net worth of such subsidiaries exceeds 20% of consolidated income, that means even if you incorporate outside of India, if that company has got either the income or the net worth exceeding 20% of the overall consolidated income or consolidated net worth. In other words, these are called as significant companies or significant interests. And this is where you need to be very, very careful, because whilst you might think that it is a company in India only will have to comply to it, the answer is no. You have to also include that body corporate, which is a substantial subsidiary or a matter. It is just only a pictorial or a flowchart graph that will help you to understand applicability of the Rule 3 under 1 Clause 1, listed companies in India, outside India. Unlisted, I've talked about 500 crores, 1,000 crores and debentures. Body corporates incorporated outside India, but income or net worth should be greater than 20%. Other categories, insurance, banking company, and all of this. So these are some things which would be included as a part of this. Now, which are the companies not covered by NFRA rules? Private limited companies, limited liability partnerships, unlisted companies which does not meet the criteria of that 500 crores or 1,000 crores or 500 crores in debt. All of these would not be covered under that component. Now, if you look at filing of NFRA 1, basically this is an information which has to be filed by the body corporates. Now, this is very, very important, because every appointment of an auditor should be filed by the company. Earlier, the auditors used to file. Now it has shifted to ADT 1 and ADT 3. But when it is covered under NEFRA, this is an intimation which has to go to the NEFRA authority, not to the MCA. So that is the rule. Because this was formed on 1st of October 2018, when the rule was formed, right, what does it say? Every existing body corporate other than a company mentioned 3 shall inform the authority within 30 days of the deployment of the form the particulars of auditors as on the date of commencement of these rules. Okay, so in other words, what you do is any company where you are appointed as an auditor under NEFRA 1, if it falls under the category of listed, unlisted on all of the categories, then you file it, right? Disclosures for everybody other than a company formed in India within 15 days. And this is a very important aspect of it because these are for the appointment of sub auditors for those companies. Please do not ask, and this is why this is very important. Your audit, there are many companies, what they do, for the convenience of getting it as an audited financial statements, they may appoint an auditor in India to audit the financial statements of that entity which is constituted outside of India or incorporated outside of India. So for those Indian firms which wants to do the audit of the foreign entity, please check this aspect of it. If it constitutes more than 20% of income or 20% of the net worth, then you are likely that your name has to be included under this NEFRA 1 form, which is filed by the corporates. NEFRA 1 is filed by the corporates. NEFRA 2 is filed by the chartered accountants or the chartered accountant firms. So you need to look at this. Now, what does it say? Now, you have to be very careful on this. Even if you're appointed as an auditor, right? When you cease to be the company, ceases to be fall under the below the category. That means it falls below the threshold which is defined under 3 and 1 A, B, C, D, E. It says the company will still be governed for a period applicable to 3 years from the date it ceases to be either listed or paid up or capital or turnover or loan falling below the limit of 500 crores, 1,000 crores and 500 crores. Now, what is a fundamental shift one has to understand? We have FRRB, we have peer review board, we have quality review board, all of these are there. Now, FRRB will take the financial statements, go through the financial statement, may issue a report to the audit firm. QRB and PRB, QRB can select companies and send it across for a technical review appointed by under their panel. Peer reviews, again appointed by the peer reviews, is a panel which is maintained by the peer review board of ICI. They send the information to ICI just because if any of the companies which requires to be audited, whether it's a listed company, banking and all of that, you require a PRB, necessary a peer review certificate. But here the fundamental change is, it is not only on the audit and audit firm, this applicability is also on the company. That means they will take the financial statements, review the financial statements and issue a report on that. Recently, they issued a report for KSRCC, which talked about various things which are non-compliant to accounting standards, disclosure norms and all of this. Now, this is the extent of what NEFRA can get. NEFRA can get into the audit quality of each of the audit firm because what it requires, and if you go through the NEFRA 2, especially when I come there, it is comprehensive information that you give. That means you say, I submit everything what I do. And therefore, they can identify or they can unilaterally identify and appoint somebody to do a review of those audit firms or the companies. So this is where it is very important. Merely because you have done the audit, you're no longer associated with the audit, still the string comes with you also as an audit firm, no longer, not only for the company, but also for the auditors for a minimum of 3 years. And I think this is a very important aspect of it, which gets missed out. Because today, right now, the focus is only on audit firms. But the day NEFRA starts focusing on audit review of the financial statements issued by corporates, probably it will have more information on director's report, more information on financial statements, more information on non-compliance relating to the relationship between the non-financial information, financial informations, and how did we issue a report under SA 720, which is other matters which we will talk about. Applicability, I've already talked about. I will not go through it, but just remember, If any entity is included under NEFRA, they will go and file the Form 1. If it is not included under NEFRA, they will file ADT 1 with the Ministry of Corporate Affairs. So that is the distinction that has been brought in by under this chart. Now, what are the minimum requirements that you need to give under NEFRA, right? You need to give the PAN details, body corporate PAN details, director membership numbers, auditors, audit firms, including income tax PAN numbers, membership number, due to casual vacancies, information relating to that, written consent by the auditors, copies of resolution filed by the board, user, director, manager, CFO, digital, all of these has to be for foreign companies, foreign authorized individual passport, foreign bordered corporate registration number, and registration number provider's name. All of these has to be given by the company. Now, where do you give this? These all have to be uploaded on the portal which is provided. That means there is an entry which you have, all the details have to be filled in that aspect of it. So the contents of NEFRA 1 talks about appointment of auditors, in summary, category of auditors, individual or firm, name of the auditors, period of auditors' accounts, tenure of previous years, whether appointment is in line with Companies Act, whether it's caused by casual vacancies, copies of board of resolutions, declarations to be digitally signed. This is typically what you would have filed if we were doing in the past. This is the format of the form, how NEFRA looks like. This is only for your understanding. All the asterisk means you have to give it mandatorily required. So if you see the color, everywhere it is red. So therefore, all information has to be provided independent, irrespective of what it is. Now, this is where the whole issue came through, that there was this more than 1,100 firms, audit firms, we did not file this form NEFRA 2. Now, there are penal clauses, there are penalties, there are also questions of, the NEFRA, if at all they go through saying this, they have not filed for 2000. Again, this is information is for 2018-19, not for 2019-20 and 2021. Because there are timelines which has to be filed, right? So if you look at the filing of annual return, predominantly all of this information has to be given on or before 30th of November every year. So therefore, this was very, very critical. Now, what are the prerequisites for NEFRA 2, right? It has to capture all of this information: limited liability partnership identification number, PAN numbers, name of the company, SIN number, global location up number. This is basically only for foreign subsidiaries, not for Indian companies. Details of fees paid, received, network registration number, details of partners, auditors number, digital signature certificate. Now, all of this has to be given, including information which they may ask from time to time. Now, there have been a lot of questions that came back. What should I give it? So they issued what is called as a frequently asked questions, right? If you look at, what are the information that are subjected to reviews, right? So it is also, as I mentioned to you, Indian subsidiary or associate greater than 20%, right? Now, all auditors filing, right, have been subjected to reviews. All of those information should be provided. All fees, information, audit report details, registration numbers of partners, total number of chartered accountants employed by the auditors, affiliations with that, all of these needs to be provided, including if there are any criminal, civil, or disciplinary actions, name of the companies that were body corporates. Now, this is for the entire information. Even if you have resigned for the last 3 years, information has to be provided. Statement of quality control policies, procedures of auditing practice. This is where the importance of standards of quality control becomes very, very important. Consent to cooperate and comply with any request or production of documents made by NEFRA with the signature of partner and authorized officer. That means you are entirely saying that you provide all this information to NEFRA in the NEFRA to list about all your clients, list on all clients, list out all audits that you're carrying out, list on all partners, list on all employees who are qualified employees, list on where the companies have issued a qualified report, list on where the firm has actually left or resigned as auditor. All of this information now in one form will go and sit in the online. This is how NEFRA Form 2 looks like. Now it gives identification of auditors. All of these details have to be captured online. Now look at this. Everything has to be captured and uploaded in the NEFRA website. audit clients, audit reports of the auditors. It talks about fees, it talks about findings, it talks about where you're not able to issue an opinion, talks about whether general accepted accounting principles have been followed, the gap and the gas, talks about net consolidated. That means you're doing everything and anything and providing this information to this, including affiliations, including partners and employees of the auditors, details of any disciplinary or other proceedings, withdrawal of an audit report, quality control policies of the auditor, consent that they will. So the entire information has to be provided under this form called NFRA 2. And this is where it is very, very important that we go through all of these informations and provide all this information. This information actually so far has been captured for 2018-19, 1920 was 30th of November, 2021 will be 30th of November 21. Now, these are some of the frequently asked questions that came back, right? Now, it says, is there a facility to upload client-wise information using Excel or Word file? He said, this is an NFRA form has to be filed online, right? Whether NFRA clause 3 and clause 4 will be applicable only if the audit firm is a statutory auditor. No, it is irrespective of it. You have to still provide if there is a foreign auditor, but it will not cover tax audits, limited review, and quarterly audits. I spoke about global location number. This is only predominantly for significant subsidiary. It talks about registration number of engagement partner and all of these. Yeah, it is only referred. This relates to more about the foreign jurisdictions. Unfavorable or unqualified reports include both disclaimer. Every information has to be given in that form. Now, other thing is whatever the services that have been provided, you need to share that information. The information relating to the current partner employee of the auditor, complete information relating to 5 years need to be reported. And this is where is the biggest challenge. Now, in today's world of where there is demand supply issue, today's world where auditors, audit firms do not get the number of qualifiers, the number of people working for this, and therefore there's a shortage of staff. And this shortage of staff is not because that the chartered accountants are not passing, they're not there. The point is the majority, if you take an analysis of the chartered accountants, more than 60 to 70% goes into industry. What remains with the audit firm is approximately 30%, of which even their active people are very, very insignificant. They are very hardly about 20% where you can say they are really active and do it. Getting people, today we don't have people. Getting people is very, very important. And that is one of the things which as professionals, we should work together with ICA and see how do we increase the pool of these professionals who pass out. Because we had only the last 2 years, we had only about one results or maximum 1.5 results. Just imagine where instead of 4 results, we are getting only 1 or 1.5 results. This is where we need to start looking at it. And this is where the pool of chartered accountants becomes essential. Today, to get articles is a difficult thing because fundamentally what has happened is over a period in time, the percentage of registration has gone down in terms of students. The percentage of people, because CA is known to be a tough course, and when CA is a tough course, getting people is a difficult challenge. And just imagine for an audit firm to go and complete information for the 5 years is a big challenge. Not all audit firms can have a system which captures all information. Some people just do on a hand-to-mouth basis. Some people may say, hey, listen, systems ko chodo pehle, client ka service pehle dekhte. That is the extent of what most chartered accountants do. If you have system that captures information, it is easier for you to just upload. If you don't have it, this is where you need to get this information. What is the likelihood in case if you don't compile this information? There are financial penalties. Fees itself is not big, but there are financial penalties. There are certain things which you may have to lose out. So for all getting into practice, it's better we as chartered accountant firms get all this information and compile and provide that information. Because I would say, bank audits are there today. We do not know when, today we are talking about small company audits being taken off. What is the guarantee that the branch audits would still continue? And again, This the same thinking goes. If you're killing one, you may kill the other two, because they say there's no value created. I'll touch upon the values, what they're talking about. But just imagine, so much of information has to be provided in respect of this, whether it's a client fee, information, details, all of that. Now, another important aspect of it, and these are the clarifications which I will not spend time, but just for your understanding, that an auditor, if you need to go through the frequently asked questions, they talked about what are the information to be completed. My humble ask to all the audit firms which are figuring in that 1,100, take that effort, whatever it means to be, then go and file that information. Because again, these informations are picked up from those companies which are listed companies, for those companies which are large size companies, calling under the unlisted companies in terms of the net turnover of 1,000 crores, paid up capital of 500 crores, and borrowings of 500 crores. So therefore, these companies would require, plus they may not necessarily be there, but they would have still carried out bank audits, they would have carried out insurance company audits, all of the or power generation companies. What is the, if you don't file it, what happens, right? There is every likelihood that the auditor's appointment, if it comes to a bank, for an insurance, or for that matter an electricity companies, you may lose out. I think better as professionals we file that document. Again, it now the other important aspect of it is on engagement quality control review. Now this is not only on the auditors who's signing the financial statements, but it is also on in respect of those people who are appointed as the engagement quality control reviewer. Because under SQC1, the quality control for firms that performs audits and reviews of historical financial information, even if he's not related to you, even if you have taken assistance, you are only a proprietor firm, or you're a two-partner firm or a three-partner firm, only one partner practices audit, the other two partners practices tax, direct tax or indirect tax, and you have taken the assistance of another firm partner as your EQCR, even that information has to be provided. It is not only you, it is also the people who are associated with you is what you need to start giving that information. Not only this, if you have done any work, have carried out any work, right? If you've carried out any work other than the work which relates to, like consulting work and all that, even those information has to be looked at, because they are looking at information not only your own network. Suppose you are part of the network, and in that part of the network carries out any other work, even that information should be provided. You have to, all these are the other matters which are there. But what is important is whether the auditor has withdrawn a report. Wherever an audit report is withdrawn, you have to give for the past 3 years, also should include the current period and the preceding 2 years, because the reason why this is important is, in this year you have resigned, if the same issue existed in the previous 2 years, what did you do to address that? So is it because of NFRA you're withdrawing it, or is it because that this existed, but now you have said it is identified? Someone can say, hey, listen, I did not report it because I thought it deemed to be fit, but today I believe that it is not appropriate and therefore I'm going. Why do you have to go and penalize, saying that you have closed your eyes for last 2 years and therefore you only opened up your eye this year? And this is something which is very, very important. We need to be cognizant about. What are the functions and duties of authority? Now, keep it in the background of your mind, that in the background of your mind, just think through the role of an NFRA is, before recommending accounting standard and auditing standard for approval by the central government, the authority shall receive recommendation from ICO and proposals of new accounting standards to seek additional information from us on the recommendation received. This is the role on accounting standards and auditing standards and mechanism. Now, the someone might come back and ask, then what is this report that have been issued by NFRA as a consultation paper? Now, MCA, through MCA can advise NFRA to go through this. So the route is that whilst you might say, hey, listen, you are not supposed to do it because it is not in your authority, it is not within your this thing, then why did NFRA do it? NEFRA can do it if they have been directed by the central government or by the MCA. And if they've given, then this recommendation will go back to this. And that's where we need to be cognizant of it. Now, two aspects of it which I talked about. The first aspect of it is the authority may review financial statements of any company or a body corporate. That means there are two roles they play. They will look at the financial statements. That means you need to be very clear, because if I'm an auditor of a company, if I'm picked up, right, I may be the company may also be picked up. Alternatively, the company may be picked up, I may not be picked up. Or another way is the company is not picked up, but I'm picked up. So just imagine, so that there is every likelihood that if the NEFRA does not pick up your audit file for review or audit documentation for your review, they can pick up company's financial statements. So both ways it comes to you. And this is where it becomes a very, very critical thing. I would suggest and recommend to each one of our professionals to just make sure you go through the NEFRA website and go through the entire documentation which is given relating to reports that I've issued. Whilst some may not agree, while some may dispute that, but this is a report that has been issued. All that the ex-chairperson said, okay, that's very good. See, these are all now up to the court to decide, because one case came on jurisdiction, another case came on these aspects of it. This is where that more and more litigations can come through, more and more litigations can happen in future. We as professionals, we need to be paid for the values, services that we are rendering. And I think this is fundamental, most important aspect. Every professional should think through it before even he bids or undercuts a fees. The risk today is not about you signed a financial statement, you got your money. The risk is that this can be picked up by NEFRA, can be picked up on the company, can be picked up by a QRB, and they each one can issue statements. Now, SEBI is acting in a different direction. Any regulator can come through. Under those circumstances, I will touch upon some of the fees, but fees is something where we need to start looking at it. We need to engage with the institute. We need to up this. The cost of our rendering has gone up, because just tell me, can you get a chartered accountant for less than 50,000 rupees, even a small tier 2 city? Because he's seeing the other side of it, where he's being paid 9 lakhs, 75,000 is being paid. Why would somebody come and join 50,000? And plus transport, plus luxury, plus air conditioning, everything is there, plus a laptop. Now just think through this. So whenever you're bidding for companies for where the fees are lower, start looking at it, and that's where it is important. Now, our responsibility today is multifold, because we used to get QRB review reports, and the quality review board used to issue reports, but there were more directions of assisting us, guiding us to do it. Today, NEFRA plays a different role. It comes of penalizing us. It is not all that recommendation is all gone. Now, today it talks about penalizing auditors and audit firms individually as well as the firm. And I think that is where it becomes very critical. So what does it call for? It calls for every audit firm should have a standards on quality control document. The organization chart, the orgogram should be there. That organization chart should talk about, that policy should talk about, that policy should talk about leadership, the policy should talk about ethics and integrity, the policy should talk about acceptance and continuous of engagement, the policy should talk about documentation, quality control processes, should talk about monitoring, should talk about remuneration, could talk about various other aspects of it. And that will define who is supposed to review work papers, how should you plan an audit, when do you plan an audit, when do you carry out an audit procedure, what are the risks that are identified, who reviews this, who evaluates the quality controls, who supervises on the engagement, what is the response. All of these which is read, which is written, which is documented in the auditing standards, SQC1, you need to bring back, go and refresh. Many of us have been refreshing it, right? We need to continuously refresh. Now it is moving to ISQM. which is again the standard on quality monitoring, international standards on quality monitoring, which is moved similar to, but it's at an enhanced level. It is like an internal, it's like a control testing which we are doing on our own self. I think that is what ISQM will reach out to, or the SQM will reach out to us. Now, the responsibility of this authority is to make direct to take measures for improvement of audit quality, talks about to make in a and after making the improvements, submit a detailed report, can look at the monitoring and take actions as deemed fit, and can refer, they can also refer to a quality review board. So that is how they work through it. Other functions is protect the public interest and the interest of investors, creditors, and other associated, maintain details of particulars of auditors, cooperating with national and international organization of independent audit regulators, promote awareness in relation to compliance of accounting standards, perform such functions and duties as may be incidental to that. Just imagine, promote awareness in relation to compliance of accounting standards and auditing standards. How many of us have actually gone through, and what is it they've talked about? Now, this is something which will come through. That means whilst right now the ICI Institute is doing it, or various forums like Sansaar is doing it, but just think through this. That means we have another regulator, another body who's going to come back and say, hey, you should do the audit like this, you should do the checklist like this, you should do the documentation like this, you should do like this, you should do like this, you should do like this. And this is what is going to add more and more stress on the system. Now, the difference between any other regulator, whether it was a QRB, whether it was a peer review board or FRRB, this has the powers of a civil court. And a civil court can summon people, can discover, can inspect, can issue cross-examination, host of things that can go through it. In all of this, the law profession will survive, because once you have examination, cross-examination, two sides. CA professional firm which is examining will have one lawyer representing, then the NFRA will have another representation. Just imagine the success of, I would say, if the growth of the lawyers were to be seen, the number of cases they may want to make it into NFRA. I think this is something we need to be cognizant about. In the multidisciplinary firms that has been introduced, please look at these aspects of it. Whilst you cannot practice a law if you practice CA profession, but just think through this aspect of it. How much of the whole gambit of a CA profession has undergone change. The firm itself has undergone change. It completely evolved today. But auditing standards definitely has not kept pace with the changes that have come through. Accounting standards have not kept pace with whatever the changes. Today you see e-commerce. Today you see any business, revenue recognitions, assets created, or lease accounting. All we know is all online. Everything does online. But we go and say whether there is a transfer of title, whether there is a transfer of consideration, whether this is there, that is there, identified delivery, all of this. We have to evolve. We have to think differently. Disciplinary proceedings, again, they have references which are based on central government by its own enforcement or oversight activities. All of these are available and which can call for a show cause notice to be issued to the auditors. So the show cause should be in writing. The provisions of the Act, details of alleged facts, evidences, violations, actions that the authority proposed to take, give them a time limit for the auditor to respond, consequence of a failure to respond to them, and a disposal of show cause notice. Now, there are timelines that have been given this within 30 days from the date of order. If you want to prefer an appeal, imagine today you have to give deposit 10%, something like, as if you're getting, so for companies have to get an excise duty refund or equivalent of any of this by taxes. Even here, the auditors have to prefer an appeal. Just imagine how much an auditor's billing should be to look at this. Not only this 10%, but also look at the insurance that will go through it. Now, where an order says that the auditor is debarred from practicing, then they will send intimation to the corporate to appoint another auditor. Now, what it says that they can punish under section 450, where the company and every officers who is in default or the auditors, everybody would be subject to a liable or penalty of 10,000 rupees, subject to a maximum of 2 lakhs. Now, this was the overview of NFRA 1, NFRA 2. If you have any question, feel free to put it on the chat box. But I'm just saying, how does it impact all of us? The biggest impact which NFRA, because of this civil code procedures of 1908, code of 1908, they can penalize to a minimum of 1 lakh or equivalent of 5 times, whichever is higher. In case of firms, 5 lakhs or 10 times of the fees received. It can debar a CA or an audit firm for a period of minimum period of 6 months, which can be extended up to 10 years. And all of them can go with an order to aggrieve, but still you need to go through that process. Because of these actions, because what they are saying, hey, listen, the ex-chairman said, chairperson of NFRA said, India is the only company which, the authority which did not do settlement like SEC, PCOB, and all of this, and therefore we are the only person which are going to ban. Okay, the question is, if the professionals are banned, today one firm, tomorrow another firm, tomorrow another firm. So are you saying that the whole objective of NFRA is to finish off the chartered accountants or the CA firms? Or if the objective is to empower or empower the professionals with the new way of dealing things, are you the advisor? Because one of the conditions is you should train, you should educate on auditing standards, educate on accounting standards, educate the people. Where is the education? If finding is everything, where is education coming through? Where is guidance? And where is a scope for improvement? This is something, is it a fear, or is it something like, because of NFRA, I don't want to do audits? Many chartered accountants, many students are turning away because they say your chartered accountant means your name comes there, each one, every person is equally responsible. And this is something which we need to be cognizant about. Does it mean that there is no fraud, there's no errors, there's nothing which is happening? No, it is ever evolving. But what is important is you're penalizing the audit firms. How many of such companies which have been fraudulent? If I take the number of 1,72,000 numbers, the bankers have said it's because of fraud. How many 1,72,000 shareholders been put behind bars? How many of 1,72,000 directors have been penalized? How many of such people have been penalized? The bankers have been penalized. Why auditors? And this is a fundamental issue which will come through it. And this is where we need to stand united. If anything happens to bar counts, any lawyer, bar comes into play. Anything happens to a doctor, the doctor council comes into it. Where are we? Is a question we need to start looking at it. And again, I'm saying there's a very important aspect of it. We need to see that nothing should go through emotions. But what we should do is gather facts, go and tell the government through the ICI, hey, listen, this is factual. This is how it works. This is how you should look at it. This is how you should address it. You are addressing the last tail. One who is wagging the last tail, you're addressing the person who is eaten everything. The person sees the fun. The auditor comes because he does what is called audit of historical financial statement. He does not audit of the current financial statements. He audits historical 31st March historical financial statements, and that is where the issue. Who is responsible? Management. What happens to that 1,72,000 companies which are fraudulent? What happened to them? And I think if we start questioning, if we start directing ourselves, start not only this, one is aspect. Second thing is, how do we enhance? Are we still saying, hey, ठीक है, दो बच्चों को भेज दो, audit कर देगा, आ जाएगा, clerk को देगा, audit report बना देगा, sign कर देगा. Hereafter, again, I'm saying, our role and responsibilities has gone up tremendously. What is that we need to do? Keep pace with the changes in law. Keep pace in the changes in technology. Adapt to the technology. Understand the business. I think that is what will take us to what people are talking about, saying that quality is gone through it. Again, the annual report has to be forwarded. I'm not looking at this. All the audits would be done by the CA and AG. I'm not getting to this. Now, let's look at this aspect of it. And it's a very critical for all the professionals because this was a specific ask. NFRA consultation paper on statutory audit. Just for your information, the basis of consultations has been comprehensive review of IFRS for SMEs by the ISB, monthly information bulletin of the corporate sector issued by the MCI, Government of India, accounting standards that are getting revised for the accounting standards for small and medium enterprises by the ICAI called the Accounting Standards 2021. Now they looked at entire thing. Now all these informations are historical information. So suppose somebody might say, hey, listen, sir, you are also looking at historical financial information. But when they issued this report, predominantly this report is as of the March 31st, 2019, nothing on 2020 or 2021. And this report, the consultation paper which I'm talking about, called for comments by the stakeholders by November 10th. Now, one of the things which is important, I do understand, we are under the election code of conduct, why there is not much of clarifications coming through. It's only the president which is issuing it. I think somewhere we need to create awareness. We need to create awareness with those, not all those, senior professionals who had actually represented, who were there in the council, or the senior people who were involved in many of these discussions, whether in accounting standards board, or auditing standards board, or corporate laws board, should come together. Start educating all our professionals. Again, what I'm saying is keep your emotion as one side, but look at it more holistically. Why is the change coming? For us, for instance, today we have a choice to watch any TV serial or a channel or a movie using Netflix. You can use any videos. You can have Z on your mobile phones, Amazon Prime, Hotstar, right? You have various things, options are there. Their revenue models are different. Today, movies are releasing there. They are adapting to the OTT platforms. Where are we looking at it? Are we the traditional statutory auditors? Are we still the auditors who will wait for the client to say, hey, listen, please tell me when I should come? Or the client says, hey, आज का tax audit है, season आप आ जाओ, दो बच्चों को भेज दो, काम खत्म कर देंगे, we will issue the report. Have we lost touch to the reality, ground reality? One side, the regulators are going too much, or I wouldn't say too much, but the regulators are going high on a lot of these aspects of it, which are not looked upon. It is not a question of a big firm or a small firm. When a fisherman goes into a shore, in the sea, when he puts a net, it's not only the big fish, the small fishes comes together. And this is exactly what I used to tell always. The appetite for somebody like, a tiger which has tasted a man's blood, called the man-eater, likes even the smaller ones when the bigs are not available. And this is the need of R for us. We need to start thinking. And again, I'm saying, look constructively. Take the good points which have been put in this one. Put across your points of view how our fees should be going. The predominantly why this issue has come up is because they focused on the fees. Why should we not have our fees mandatory? Why should we not look at that? Why should we charge 5,000 rupees, no rupees, nothing, just because I charge zero and get an assignment? Because I can make money in other sides? I think this is the need of R, where we should start thinking, can I provide a service for 5,000 rupees or 1,000 rupees or 500 rupees, a certification, but your responsibilities, you should have an engagement letter, you should have an audit, you should have a confirmation, you should have a representation letter, you should have a documentation, have a conclusion, you need a UDI number, everything. Can it happen in 500 rupees or 1,000 rupees? This is where we should start looking at ourselves and start looking at it. Today the client would come back and say, sir, aap dekh lo sir, hame to kuch pata nahi hai. When the problems comes to him, sir, हमको तो कुछ पता नहीं है sir, auditors के office में, auditors के office से आया है. Are we a representative of the company? Are we an independent professional? Time has come for all of us. Start looking at it. If there are good practices, let's do it. Competition is healthier, but competition should not be in undercutting And by undercutting, if you get into what is called as non-compliant, that's where bigger challenges come through it. Now, the research findings on MSME predominantly has been, as I said, payment to auditors, turnover, net worth, indebtedness of companies with net of 250 crores were analyzed. The payment to auditors made by companies as reported in their filings compared to the estimated standard cost of an audit for a reasonably good audit in compliance with the letter and spirit of standards on auditing. Just imagine, this is exactly the point I'm trying to draw. Today, one way we are moving to technology. To acquire a license is very high. To acquire somebody who's expert in IT is very, very high. But for us, the fees remains the same. When audit came up in, the companies that came back and said, hey, listen, let's do a rotation mandatory. Everybody was happy because they thought that the audits will come back to the small firms, not to the big firms. But what happened? The story was different. But in that story, what happened? That lot of audit firms went and undercut the audit fees. And there is a report which is, if the large firms and the other firms reduced fees by almost 1,000 crores. That is the saving which we gave back to the companies. In return, what we got? We got NFRA. We got NFRA, which says the cost of doing an audit, the standard cost of an audit for doing a reasonably good audit, at a minimum, it says should be 1.5 lakhs. At a minimum. We are talking about 5,000 rupees, 10,000 rupees, 25,000 rupees. Where are we on that scale? And I think that is what it is. Second thing, with more and more automation happening, the requirement of tax audits, the requirement of GST audits are all gone up to a particular threshold. Now, where are we on that? We thought GST is there. We worked hard. All the Indian professionals worked very hard with the system to make sure GST is operational, knowledgeable. Without this professional fraternity, I don't see any implementation could happen. That's a great story. Where is that great story getting reflected in this aspect of it? Today, we talk about estimated standard cost of audit. And I think this is the story which we need to go back and talk about it. Now, the most important aspect of it is on the financial reporting, right? Now, if you look at the financial reporting which is required, right? They talk about, you have about 16 characteristics of that, right? When you have generally accepted financial statements, right? When you have such reports which are coming through, when they looked at the IFRS, they only talked about relevance of two aspects of it on the qualitative characteristics. What did they talk about? They talked about relevance and faithfulness only for SMC companies. They talked about only two. But for the rest, it talked about qualitative, relevance, materiality, faithful, enhanced quality, comparability, verifiability, timeliness, understanding. When that being the case, where are we today on this? If you are saying the whole objective of issuing an audit report is only for relevance and faithful representation, that means relevance means it should be prepared, because all these general purpose financial statements are prepared for the user stakeholders, right? Because what do? They form an internal part of the internal party or an external party, because they are involved for funding, supplying, customers, joining the companies, all of this. But when the IFRS came in for these small and medium enterprises, they came back and said the accounting standards are only relevant for relevance and faithful representation. Relevant means for the period, faithful representation, true and fair view, nothing more. When that being the case, why do you need a statutory audit for micro, small, medium enterprises? Now let's look at some of the key data. I want you to pause, understand this aspect of it. It's very important. I have some analysis, which are not everything is reflected, but let me give you an analysis of the total size of the companies. The total size of the companies as of 31st of March 2018 was 11,59,945 companies. 19 was 11,49,000. 20 was 11,91,000. 21 was 12,99,710 companies, right? They did a finding analysis for the how many companies, active companies filed. How many active companies filed the financial statements, audited financial statements. Of the total companies of what I mentioned, right? If based on the data, if I were to take 11 lakh, take for a ballpoint figure, it's about 12 lakh companies. 52% of only companies filed. That means balance 48% have so far not filed. Either they're not existent or not there. Leave all this. Of the total listed companies, approximately 4,400 companies only published out of the total 8,800 active listed companies. Only about 4,300 companies filed their audited financial statements. Now, what are we talking about? Listed companies are not filing in the MCA website. Unlisted companies not filing substantially, because the majority of the population that we talk about is only private limited companies. Private limited companies, only 52% have filed. The balance 48% is not filed. Look at that. In addition to this, of the filings, what was done, 99% of the companies have a net worth below 250 crores. They called the micro, small, medium enterprises or companies. Now, of which 5,80,000 or 97% have submitted financial statements under the accounting standard framework of 2006. That means there are old accounting standards, and about 3% filed under the new accounting standard, which is the Indus framework. So they did this bifurcation of companies, which they did not do. Now, this is status as of 2018, right? How many companies are there? Less than 250 crore companies. There are only, we are talking about 5,99,000 companies, right? Greater than this, 3,568 companies. Now, when this being the case, if you take out 5 lakhs, if you take by sheer number means we are talking about auditor, audit firm, all of this only for companies which are greater than 250 crores or listed companies. That means 3,568 plus 3,478. We are talking about only audit of 7,200 crore, 7,200 companies only in India. Entire chartered account firm will audit only 7,200 companies. If I take, if what NFRA goes through, if whatever the consultation paper goes through, that means all of these will go away. Only 7,000 companies. Do we need so many firms to audit this? GST is gone. Tax audit for net worth is gone. With blockchain technology coming through 5 years, even this, everything will go away. We are talking about 7,000. Now, this is something, it's a mind-boggling thing for all of us. It's a concern for all of us. I'm not saying because you have to have an audit. I'm only saying is, based on this analysis, this is reality. We need to accept this. And we will talk about more about this. Now, having said this, right, we are talking about 5,99,000 companies, 5,95,000 you take for all of this. What does it say? 1,81,000 companies, approximately 30% of companies have reported nil payments to auditors. That means your audit is just putting a stamp and giving it. हाँ सर, आप तो टैक्स में पे कर रहे हैं ना सर, हम फाइनेंशियल स्टेटमेंट को स्टैम्प करके दे देंगे सर, कोई बात नहीं है. Is this what it is reality? Is our fees getting into the tax and therefore this fees is shown nil? Okay, take the other case. 2,48,000 companies, approximately 41% have reported less than 25,000 rupees paid to auditors. अब 2,48,000 ले लीजिए, 1,81,000 ले लीजिए, almost 4,30,000 companies have got, which are very small. That means from those balance sheets which 60% is only filed, almost 80% is 41 plus 30, 71% is gone. Take another case. Of the total 6 lakh companies or 5,99,000 companies, 2,09,000 companies accounted for nil turnover, or 3,67,000 accounted for less than 50 crores. We are talking about 95%, 96% of companies have got low turnover. एक जगह nil payment हो गया, एक जगह small payment हो गया, दूसरा जगह turnover. These are all facts. The only way we can look at it is this facts correct or not? That is the only channel we need to use our energy to understand it. Take all of this. The estimated standard cost to perform a reasonably good audit in compliance with the letter and spirit of standards on auditing for an MSME with a turnover below 50 crores should be minimum of 1.5 crores to 8.4 crores. These are minimum. Sir, अपना time scale कितना है sir? Payment to auditors per hour कितना है sir? Agar if you take genuinely those what should be done, this issue should have been addressed, na sir. Because we have a schedule of minimum scale of fees to be added. How many such company firms, audit firms are not charging? And there's a clear reflection in the analysis which the MCA, the NFRA has done using the information bulletin issued by the MCA. And that is the extent of impact that can come back. And this is why I'm saying this may become a reality unless we revise our fees, unless we go back and say, hey, listen, these are the companies are forming part of the major companies, which are where the audit fees are paid as a part of the group, and therefore it is not distributed. That could be one of the reasons. It is seen in the consolidated financial statements. Some of the companies payments are made directly, so that it gets recorded in consolidated financial statements. Some sort of a thing, understanding should come through it. Otherwise, it becomes very difficult. Take another. Nil indebtedness. 44% of the MSME has nil indebtedness, or 42% has got nil or reported nil turnover. That means of 11 lakh or 12 lakhs, we are saying 42% are not under this category. Or net worth is almost 76%, is a 0.0 to 2.5 crores. Or in other words, we are talking about 25 lakhs. 20% is again 3% is only between 25 to 250 crores. That means, in other words, majority of these companies have got turnovers lower than 20 lakhs, 25 lakhs, 50 lakhs. Very few companies who's got debt more than 25 crores, which is about 3%. And this is where they're talking about. The analysis clearly brings out that a preponderant majority of these companies is very small in size in terms of key financial parameters. Payment to auditors by such companies minuscule and far below the minimum standard audit fees cost estimate. That means they're saying that the entire, the micro, small, medium companies do not need audit because this is based on facts. Look at this analysis. Now, 0.5 crores, which is 50 lakhs to less than a crore, 20 lakhs to 50 lakhs, 0 to 20 lakhs. Just imagine the fees, average estimated audit fees. What they are saying, average per company, the small firm should charge 1.5 crores, 2.68, 4.7. And that's how they come through at 58%, 39%, and 31%. They're saying any company is about 25,000 crores, it is within 5% of PBT. This is on a very high side. But just look at this. They are saying you cannot have an audit fees beyond 4% or 5%. But small and low companies have got 31, 39, and 60%. In other words, they're saying the companies are not profitable and therefore they need to pay this. And this is something which we need to look at. So another point they came by, this general purpose financial statement for MSME is very, very nil. It is not used by everyone. Lenders only on a specific requirement, they may require it. And so is the case of turnover tax audit. If it is beyond 10, up to 10 crores, not more than 5% is not in cash, then therefore it's not required a tax audit. So they are using all of this, saying that Tax audit you removed, GST you have removed, now you remove small auditors. And also compared with CARO. CARO also says 1 crore, 10 crores definition, 25 crores. Now the question on all of these, should you now suddenly revise CARO exemption? Now every company should be applicable. Every ICFR should be issued. Because under the standards, under the Companies Act, under section 134, it says internal financial control is the responsibility for private limited of the board of directors. It only talks about adequacy of internal controls. Whereas the guidance note issued for the internal financial control reporting says every company, the auditor shall issue IFC report, and they've exempted all of these. He says when you yourself have exempted, when you yourself say there is no risk, there is nothing, no work, why do you need an audit on this? It may sound very true, but think through this. These are some of the things on global jurisdictions which they compared, but they made this analysis. 10,000 to 25,000, 1,29,000 companies, less than 5 lakhs, and if you take less than 1 lakhs, if I add the math of from 599, 181 is zero fees. 1,000 rupees to 5,000, less than 5,000 is 39,891. 0 to 1,000 is 817. Public companies and private companies. 5,000 to less than 10,000 is 77,000 companies. Less than 25,000 is 1,29,000. Just look at it. 181, 123 plus 70 plus 7, 4. We are talking about almost, we are saying, boss, we are not charging anything, so we don't need the audit. More than 70% to 75%, we are saying we are not billing them. This is based upon information that is filed through the XBRL, the information that is filed on the MCA portal. And this is the reality. Now, what are the things they said? This inference of inescapable of such audit is perhaps only a sham. It doesn't have any quality. The general purpose financial statement is not used by anyone. Exempting from small companies from mandatory audit, which actually means ease of doing business, right? And they've used examples of ICI to say, when you yourself have exempted, what is the need to do this, right? And they've asked specific things of questions where they said they need answers. Those specifically and precise answers were listed. Comments, suggestions, rational. Comments, suggestions contain alternatives. What are the questions? The 4 questions. Do you think micro, small, medium, and depending upon some criteria threshold should be exempted? If not, why not? If yes, what would be the criteria? Do you think there is a requirement for separate auditing standard? If not, why not? If yes, what should be there? The cost of conducting audit prescription is inputs for responses 1. Do you agree with the approach? If not, which are the assumptions you should consider? Do you think the current exemption for FAQ needs to be standardized, made uniform? If not, why not? See, just imagine. They push it back to the auditors and say, hey, listen, you look at it, come back to us. And I think it's for time for us. Let me be very honest with you. It may cause a concern to me, but the way the technologies move, the way we are dealing business, the way our lifestyles have changed. The way we are now, we don't even go to a grocery. We don't even have to do anything. We can sit everything and do everything at home. We can order an Urban Club. We can order a big basket. We can order an Amazon. We can order a car at home. I don't have to own anything. Now I can go and stay in a rented place. I don't have to have a own house. All I need is only my money. When businesses have undergone change, when technology has undergone change, the cost of doing anything has gone up. It's on efficiencies you can bring in, but an audit is not something which can go on what is called as mass production. Audit is an expert's job. And audit, again, if you go back to SA 230 on documentation, you should have such documentation in such a way that an expert will be able to come to the same conclusion. When we consider ourselves as an expert, why is our fees low? Think through this. There may not be many merits. There may be merits in any of this case. But we have to think through this and look at ourselves and say, hey, listen, are we doing the right thing? Do we need to have these issues addressed? Because this is how it will go through it. Whether we like it, we may not, we may have representations, we may get deferred like our CARO 2020. Look at Caro 2020 today. They put everything onto the auditor to go and do a true and correct basis. 47 clauses out of the 21 clauses, sub clauses including 26 is 47 clauses. Can we do less than 0 rupees? Can we do less than 1,000 rupees? Can we do at 5,000 or 25,000? Time for us to think back, prick ourselves, pull it up ourselves and say, hey, listen, we are professionals, we are experts. We need to be paid for the services that we render. That's all I had for you, ladies and gentlemen. Thank you very much. And if there are any questions, I'll hand it over back to the studio. All yours, Prachi. Any comments?
Yes, sir. Thank you, sir. We have some of the queries.
Go ahead.
In Form 2, Clause 2, there is a question regarding reporting period. Against this, whether to mention or audit of which period conducted or period during which various audits are conducted.
So there are year-by-year information that has to be provided. 31st March 2020, 2018, 2019, 2020, 2021. That's the period of the audit that you've carried. Even in 2018, let's say you've carried it for 15 months period, you have to give that period. So it is the year in which you've completed for it. That's the reason they give you 9 months, almost 9 months, 8 months. That means 31st of March, you need to file by 30th of November. That means by which time all the audit, AGMs, everything would be conducted, and that's where it is.
In Clause 3b, there is a question regarding whether auditor filing annual return has been subjected to any other review by other regulators. For this, do we need to show peer review conducted by ICAI?
That's right. So if the firm has been subjected to peer, that's the reason where your question and answers were specific. They've been brought in. Any peer review done, conducted, any QRB review done, conducted, all of that has to be provided. You give the mention in the year, what it has been from, and all of that.
After Clause 4b, I'm not able to go to next step as there are 0 entities falling under Rule 31A to E. So how to go to next step?
After Clause 4b, if I'm not able to go to next, there are 0 entities. See, there are two things which you need to look at it. If you have got any companies that are covered under clauses 3.1.3.1A to E, those gets covered. If it is not covered under that, you don't have to go to that. NFRA this form is applicable NFRA 2 only if entities fall under that category, specific category.
We have only one listed company audit and 10 non-NFRA companies. What to mention in Clause 4A and 4B?
So you have to say that, you see, all they're asking is to provide information relating to which are the companies. Suppose you've got NFRA, one company, listed company, provide that information. Non-NFRA companies, they say there are all companies less than 500 crores of paid up capital, less than 1,000 crores of turnover, less than 500 crores of it, and does not fall under the corporate having a significant subsidiary, does not fall under insurance, banking. But if you've done banking, insurance, or power generation, you need to provide that.
Okay, sir, I think that much query we have. So thank you so much, CA Ganesh. It was pleasure having you here. It was a great session, and also once again, thank you for sharing so much depth knowledge on this topic. It will be very useful to us. So thank you so much.
Thank you very much, Prachi, and thank you to Sanskar for hosting me today, this evening. Thank you very much.
Thank you so much.
Thank you.